The Bank of England doesn't have enough trucks to move my gold and silver. That's a problem. That's a default. Or whether we're seeing in the United States where the largest single delivery of silver ever in the history of the COMEX happened in May. Or whether we're seeing China, which is the second largest producer of silver in the world, literally buying silver from all the miners directly in Peru, which disintermediates the marketplace. They're buying what's called doré and concentrate. Doré are the bars the miners make that are crudely refined, maybe 30 or 40%, before they send them to a refiner to be purified. And concentrate is a sludge, liquid sludge byproduct of that. They're buying all of that stuff in Peru, right from the miners, and then sending it back to China to be refined. They're paying double what the West will pay, but this accumulation is totally opaque. How much did they buy? What effect does it have on the price? On the supply, nobody knows. But this is coming from the second largest producer of silver in the world. Why are they doing this? Why has India bought over 900 million ounces in the last 5 years, more than the LBMA has in total? They've bought in the last 5 years, and now Russia, accumulating it for strategic purposes by the state, the first country to say that.
One of the best things about my job, per se, is I get to hang out with people who are authorities in their field. And as some of you know, is I've been a hard money asset, a hard money guy for years and years and years. I mean, this here is 1964 was when they took these little quarters and they turned into copper. And it was called Gresham's Law. And Gresham's Law says that when fake money or bad money enters the system, good money goes into hiding. And there's something intuitive. I don't know what else to say about it, but as soon as I saw that copper, in 1965 or 64, immediately I started saving the real silver, getting rid of the fake silver. That's Gresham's Law. But today, as some of you know, silver is about to take off again. I remember it took off during the Hunt brothers, when the Hunt brothers tried to corner the silver market. And there was a frenzy going on there. But silver right now, in my opinion, is the number one investment you can make today, at least for the amount of gains. And then, like I said, one of the best things about my business is I get to hang out with smart guys like Andy Schectman here. So we're going to be talking to Andy about the business of precious metals. And the reason I say that is when I buy precious metals, let's say it's $10, then they add a commission, whatever you want to call it, onto it. But what happens when you try and sell it? And lately, YouTube's been filled with people trying to sell their gain, their gold or silver, and they're getting run around. So just about 4 or 5 years ago, I had a friend I bought several $100,000 of gold and silver from him. And when I tried to sell it to him, he gave me one of the worst prices I've ever seen. And I stopped doing business with him. And he's a local guy here, but I just didn't understand the business. And I wrote it off to that. So I usually don't sell. I buy forever and hold. So Andy is in the business of precious metals, coins and things like this. So Andy, welcome to the Rich Dad Radio Show. And I trust you can shed some light upon your business about when you sell and when you buy back. Okay.
Absolutely. It's good to be back, Robert. Nice to see you. I'd be happy to be as transparent as I can.
Good. So yes, if I buy a pair of shoes for $100 and I wear it for a year, I can't expect to get $100 back. But if I buy $100 worth of silver and the price of silver goes up, I expect to get more money back. That's the nature of this business. So how does it work from your end? I mean, you obviously like it when people buy from you. But what happens when somebody comes in to sell their silver or gold to you?
So most of my career, which is 35 years now, almost 36 years, Robert, whatever product you would be selling, you would receive a premium, a excess premium above the spot price, above the melt value. Whatever the product was, some products would have a higher premium than others, but there was always a premium. We can use Silver Eagles as an example, and I can show you what you're really getting at here using Silver Eagles. So let's just pretend that you called me November 2019, and said, I'd like to buy a mint box of Silver Eagles, 500, 1 ounce, brand new United States Silver Eagles. Sure. You say, Andy, what will you sell it to me for? And if I should need to sell it back, what will you buy it for? I would have said to you something like this. Now, this would have been the same answer I would have given you for pretty darn well near 30 plus years. And I would have said, sure, Robert, I will sell it to you for $3.29 over the price of silver. I'll buy it back from you for $2.79 over the price of silver. That spread, 279 to 329, 60 cents or so, would have been our commission per coin. So $300 on a mint box. That would have been for almost my entire career. That would have been standard. Now you say, okay, I'll do that. In fact, I want to get $100,000 worth. Sure. This is November 2019. You call me back 6 months later, March, April, May 2020, the pandemic had hit. Andy, the pandemic really affected my business. I need to sell those mint boxes. You told me that you would pay me $2.79 over. Is that still good? I'd say, no, it's not, but how about $11 over? Because the demand was so high for the price of silver, and for silver American Eagles, that in 6 months, the premium went from $2.79 over bid price to over $11 over the price of silver bid price, where it stood for most of the last, or 2020, 2021, 2022, 2023. And then things changed. They changed in a very substantive way. And that's going to get us to where we are now. So at least in terms of looking at where we were and where we were before that, you always would receive a premium above spot, but a small one. Then came the pandemic. The premiums went much higher. But let's discuss, before I get to where we are today, how those premiums are derived. Now, there's about 5 or 6 massive primary distributors. These are the distributors that work directly with the mints and the refineries globally. These are the companies that some of them are publicly traded. They spend billions with a B of dollars buying and selling precious metals every year from the global mints: South Africa, United Kingdom, Australia, Canada, and the United States, and Austria. The 6 primary mints. And their job is to provide liquidity to the market, to be a market maker. So let's go back to the pandemic. These primary distributors who have agreements with, let's say, the United States Mint, they take everything the mint will give them because there's so much demand. The mint says, we're out of product. That's it, no more product. These primary distributors then become the market makers moving forward. They are the ones that set the premiums either to the upside or to the downside. There's so much demand in 2020 and 2021 that they say, we'll pay anyone that wants to send us their Silver Eagles $11 over the price of silver, but we're selling them at 12 or 13 or 14 over. Now that spread, which was much bigger than normal, was big because you can't hedge the spread or the premium. You can only hedge the metal content. So anyways, first and foremost, your guy in Arizona really is not the one who sets the premium. It's whoever he's going to sell it to, the big primary distributors. They're the ones who set the premium. What's interesting about right now, maybe the most interesting thing about the environment we find ourselves in right now, and why the premiums are so low, is that really starting in 2024, we had the rise of NVIDIA, the accentuation of the Mag 7, the huge demand for cryptocurrencies, Bitcoin. You've talked about that for a long time. And so the American public did this 180 during the pandemic and the banking crisis, from risk off to risk on. And we saw a lot of selling and non-participation in the metals market. So the premiums went down. But here's where it gets really interesting. Where we are right now is a very unique situation, because you still have the American public who has yet to really take your advice, Robert. They're beginning to. They're waking up. But this is simultaneously happening when the COMEX market is experiencing the largest deliveries that they've ever had in the history of the market. In fact, the May delivery contract for COMEX, where the prices are set globally, delivered the largest amount of gold and silver in the history of the COMEX ever. The biggest money up here, they're standing for delivery. They're the ones pushing the price higher. The public hasn't. The public has a very tiny, if any, allocation to precious metals. In fact, Rick Rule says 0.5% across the entire United States, from Joe and Jane six-pack to the Harvard Endowment Fund in terms of allocation to metals. So what that means is there's more physical metal available on the street than the dealers have the ability to sell. And so as more people come in, the bid prices are getting lower and lower and lower. At the same time, the people at the top are draining the world's exchanges. It's just a matter of time. So anyways, all I'm trying to simply say is this. Until 2020, premiums were almost consistent forever. You pay a few percent over spot when you buy, you get a couple percent less, but still over the price of spot when you sell. Since 2020, everything's gone crazy, whether it be premiums that are higher than anything I've ever seen in my career, to where we are right now. And in defense of this gentleman, I will say industry-wide, the premiums are lower than I've ever seen, ever in my career. And it's not us, it's the people one step above us, the primary distributors, that are the market makers. That's really as honest of an answer as I can give you, is that when I take in $1 million worth of gold and silver, if I can sell it to my clients, great. But if I'm a coin shop in Arizona, I may not have that ability and I may not have that liquidity. So I have to turn around and sell it to a company like me or a company above me, the primary distributor, and the bid prices are going to be lower because there's so much excess supply built up, because the public has been chasing profit instead of realizing what the biggest money in the world is doing, standing for physical delivery. And it's a cycle, and we're at the bottom end of the cycle now. I would expect to see premiums move much higher industry-wide as there's more awakening in the American public who finally start to say, you know, Robert Kiyosaki was right a long time ago. I should have been buying silver and gold. And when that happens, just like that, the premiums will flip. So in his defense, it's probably not him as much as it is the players above him who are bidding for the product he will return because he can't hold all that product, whether it be because he can't hedge it or because he doesn't have the checkbook to pay it and leave it sitting on his shelf